Folks, I'm warning you, they're about to come for your shares. Some important subjects I want to talk about here today and explain to you what's up next in this market, okay? And explain to you what they're going to be up to next. They are coming for your shares next. And I got to talk about a few points so you're ready for these, okay? Because nonetheless, this happens time and time again. What we're going to see play out now is the same exact thing we've seen time and time again in this market over time. And so I want to show you that. So then you're just mentally prepared for what's about to happen and how they kind of play these games out with everybody so you can kind of not fall into the traps nonetheless, okay? Hope you guys enjoy this as always. Thank you for being subscribed, okay? First off, right off the bat, okay, everybody's talking about Super Bowl this, Super Bowl that, right? Rihanna might be pregnant, it looks like. Elon Musk was spotted at the Super Bowl. I was like, man, what a slacker. Get to work, Elon. Just kidding, okay? But yeah, Elon Musk was spotted at the Super Bowl. Everybody's talking about who won the Super Bowl, man. Chiefs won, right? I'll tell you who won the Super Bowl. Whoever's getting all that money, okay? That's who won that Super Bowl. Those commercials you watched, $6 to $7 million a commercial. And you know what that makes me think? Okay, the game was on Fox, right? So who owns Fox? Well, Fox is owned by 21st Century. Okay, 21st Century owns Fox. Who owns 21st Century? Who's really getting all that money? Oh, the Walt Disney Company, the stock I just bought for the first time ever on Friday. Or did I buy it? Oh, you might have to join my Patreon, which is linked in the description area down there to see access to all the new stocks I bought. But yes, Disney is one of the stocks I did buy. First time ever, and I'm about to aggressively add this company over this next 3 to 6 months. Bob Iger is about to take this baby back on a rocket ship ride, just like he did in the past, to massively, epically outperform the market over the next few years, and everybody's going to get to see how that plays out. But yeah, nonetheless, guess, who's getting $6 to $7 million every 30 seconds? Disney was getting $6 to $7 million every 30 seconds. Those commercials were played in that game. That's who the big winner is. But you know another big winner? This one is a little under the radar. Let me tell you about another big winner of today, okay? That's this company, Fubo. Guess what happens every single time there's some sort of sporting event? Fubo gets a massive epic bump every single time, and look at that Google Trends data from today. Oh my gosh. Basically, as soon as it started getting close to game time, Fubo went on a rocket ship ride to the moon. And this is a great thing for Fubo. Like literally every single time there's any sort of big sporting event, like if college football season is about to start, if NFL season is about to start, if it's the Super Bowl, if it's the World Cup, anytime there's about to be a big sporting event, maybe NBA Finals, whatever, all of a sudden Fubo gets this epic uptick in just crazy amount of new users because it's one of the most known kind of streaming services, especially if you like sports. And so that's just a great news, right? Fubo's got a lot of issues that they got to handle in 2023 and got to get a hold on when it comes to their cash flows, when it comes to their profitability. They got a lot of problems to handle in front of that front. But in terms of the revenue front, in terms of brand recognition, and every time there's a major sporting event, Fubo sees crazy demand. They got that on lockdown. You know who else does? YouTube TV, which is owned by Google, okay? YouTube TV, like anytime you're thinking about signing up for a service, like YouTube TV's basically become the brand name, right? Fubo's definitely there, but Fubo's way under YouTube TV. YouTube TV's way more popular because Google just has way more money to spend than somebody like Fubo, right? Doesn't mean there can't be a market for both, because there certainly can. It's just like this is a huge, huge demand. So this is something that every time there's going to be a major sporting event or major something going on where people need to sign up for a service, YouTube TV's always going to be there to be that big service, okay? So let's start getting into this and kind of what Wall Street's going to be up to here, okay? First off, let me take you into how I even think about the stock market, right? The way I think about the stock market is it's one big game of chicken, essentially, okay? And they want to get you to chicken out. They want to get you to sell your shares and sell your assets at very low prices so they can go ahead and take those shares off your hands. A lot of times people think they want to try to get you to buy. No, they don't want to get you to buy. They want to get you to sell. They want to get you to sell, because when they can cause panic, some sort of major sell-off in the market, that essentially puts them into a situation, right, where they are able to add these assets at incredibly low prices that people are just like, wow, I'm really getting this stock for this price, right? And Wall Streeters get to, have incredible appreciation in very short amount of time on the shares that they're able to pick up for very cheap prices, right? And so the next up here, this next thing up, we got a few things are about to come, but the next thing up is January CPI, okay? The January CPI report could be a massive shock to the stock market, right? They're already trying to scare you about this next CPI coming up here in a few days. days. CPI is expected to see a big jump in January month over month. So in terms of what Wall Street wants to send your attention to now is they want to send your attention to month over month numbers. Why do they want to do this? Well, the reason they want to send your attention now to month over month numbers is because the year over year numbers are becoming less scary. Like year over year numbers are going to start coming down in an epic way. And this CPI that's about to come out here, this is extremely important for everybody that's watching this video to understand this, okay? The CPI report that's about to come out is the last one where it looks at 2 years of comps, essentially. And starting next month, it's going to move to essentially comping against last year's numbers. So the bottom line is, if you're looking at a year-over-year basis, CPI is going to come down in an epic way. And so now, Wall Street's not going to be able to scare you out by looking at CPI on a year-over-year basis. It was fine for them for a while. When CPI was going crazy, they got a lot of people to panic out of this market. And look at where stocks went back in the summer and the fall of 2022, right? I mean, we had the greatest companies in the world trading down 30, 40, 50, 60, some even 70% plus for the greatest companies in the world, right? And they got a lot of panic because the numbers went to the moon, right, when it came to CPI on a year-over-year basis. But this is not going to be a story anymore on the year-over-year numbers. It's going to become less and less, and we're going to ultimately move to the fives. This is trueflation. Trueflation shows us at pretty much the lowest numbers we've seen in quite a significant amount of time, like since like 2020 time, essentially, right? In terms of inflation, that's still a high number. Let's be very clear about that. 5.26%, that's still a high number, but it's not nearly as scary when you're coming off of 9% plus, right? Which was kind of more of a shock and awe type number. So this is what they have playing out. So now they're going to try to take your attention a month over month and say, oh, the inflation went up this month, and then it's going to drop a few months and they'll kind of lay back. And then, if it goes up, then they're going to try to scare you every time the month over month numbers come out. They're going to try to scare you into thinking like, oh, see, this means inflation's here to stay. The Fed's going to have to raise rates a million more times and try to cause some sort of panic so everybody freaks out and like has to sell their shares, right? It's just one big game of chicken. That's all it is. It's one big game of chicken. Get you to sell very poor prices, right? Get the masses to sell. They are able to stand there, scoop up the shares. Remember, every time you go to sell a stock, somebody's buying those shares. It's not like those shares, when you sell them, they just go into oblivion or something like that. Somebody is on when there was somebody selling Tesla shares last month for $101, okay? And there was somebody on the other side buying those shares for $101. Somebody sold me Tesla share for $103 last month. And I bought those shares for $103. Somebody was selling me Meta shares for like $100, okay? And I was able to pick up those shares. So you got to understand there's somebody that's always on the other side of that trade, right? And you got to ask yourself, who's over on the other side? It's always big money. It's always Wall Street. It's always the experienced players. And they realize everybody's just fools panicking out of the market for whatever reason they want to panic about. And it's a new problem tomorrow, and it's a new problem the next week, and it's a new problem the next month. And it's whatever can get people to panic, essentially, right? You're going to hear more and more news about this, right? The front page of CNBC here, U.S. and all balloons and blah, 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 okay? And they're going to try to get you to scare. Like, at the end of the day, like, if that's going to happen, that's going to happen, okay? In terms of the worst case scenario there. Like, don't even worry about that because it's not worth your time. It's not worth your time and attention. If something happens, it's going to happen. Like, you know what I mean? Like, and the more you really understand about finance, global finance that is, and the more you understand about how the U.S. and China's debts are so reliant on each other and the economies, and actually the populations are much more reliant on each other than really a lot of folks realize. The more you realize this is all just a show. And it's just another reason to, it's really what a lot of this comes down to, folks. And I think I need to explain this to everybody because a lot of people see this stuff. What a lot of this comes down to, okay? It's a very high-level game of chess that these countries are playing against each other. And how they kind of maneuver these is it's for negotiations many times. And so, you see this, you see that, and then China says, that was bad. You guys shouldn't have shot down our balloon, so we're not going to do this. Or now they're going to try to use some negotiation leverage. And then the U.S. uses that back. You should have never been flying balloons over our country. What are you thinking doing that? We're not going to do this. We're not going to do that. And so this is all just tactics. It's all negotiations. It's all positioning. It's all fear and try to, China, they could have sent much scarier stuff than balloons, right? But why did they just send balloons? Think about that for a moment, right? And I covered this recently. This was so important. Like, I covered one of the most important things, I think, that no one's talking about. What did I say last week? I said, You think they need balloons for surveillance? Do you know how many satellites China has up in space right now that can see everything that's going on? Do you know the U.S. satellite program that we have that we can see everything into detail? We don't need balloons. Give me a break. This isn't the 1970s anymore. Give me a break. This is 2023. They got high definition satellites that can take a picture of you in your backyard right now if they want to. Give me a break. You'd be flipping my flapjacks, man. Yeah, gosh. But anyways, this is just going to be another reason to get you to kind of panic and sell out of stocks, right? If we look back throughout history, right, the largest percentage losses ever in the stock market, right? 1987, October 19th, they got the stock market to go down 22% in a day. That's just it's hard to even register that in your brain. How in 22% in a day, right? Look at this, March 16th, 2020. They got the market to go down almost 13% in a day, right? 1929, March 12th, 2020, got the market to go down almost 10%. This is a Dow. This is a Dow, man. Incredible, right? 2008 right here. 2008, they got the market to go down almost 8% that day in 2008. That was October 15th. That was pretty close to the first bottom we had in the market. We kind of had a full-time bottom around October, November, and then we had another bottom right around the same range for the indexes right around February of 2009, essentially, okay? But yeah, they got the market to sell off almost 8% in a day, right? March 9th, 2020, another panic day where they got people to flip out. December 1st, 2008, another day they got people to panic, 7.7%. October 9th, 2008, that was just a crazy time when the market was just getting wrecked. 7% that particular day. 1997, this was prior to, obviously, a crazy bull cycle in the market, one of the most epic bull cycles, if not the most epic bull cycle we ever saw in stock market history, right? Prior to that, they actually got the market to sell off heavy. 7% plus move, October 27th, 1997 right there. And then September 17th, 2001, which was obviously the first day the market was opened after one of the worst days in obviously U.S. history, right? And the market went down 7% that next day, which was just another reason that they had to get to steal people's shares. Think about that. People were selling out of the Dow, right, at 8,000 something points. The Dow today is what, 33,000? 33,000? Do you know what Apple shares were back in 2001 on this day that people were probably dumping out of Apple stock? Do you know what Microsoft stock was back then? You know what I mean? Just go back to some of these great companies. You know what their stock prices were that day versus what they are today? But yet there were people panicking. They were panicking out of the market, trying to sell as fast as they could, right? Out of fear. And like I said, it's always a different reason, right? It's always a different reason. Every one of these was a different reason. But every single time, it's always a false reason. Every single time. That's the important part that people forget. They always think this time's different. Oh, this is a bigger situation. Oh, this time they're shutting down because of, it's a once in 100-year health event, so we're going to have to be down in the market for years. Oh, yeah, how did that work out, right? Look at the biggest point drops ever, right? Notice how most of them come now. Why? Because the market's bigger than it's ever been. So these point drops you're seeing today are going to be nothing compared to the point drops in 10 years from now, or 20 years from now, or 30 years from now, right? But I mean, look at this. You know how many people were selling their stocks in March of 2020? When the Dow was 23,000, 21,000, 20,000, 19,000. Panicking, completely panicking out of the market because this time's different. This time the market's not coming back. And then here we are a few years later in the Dow's 33,000, 34,000, right? Look where those stock prices were at that time versus where they are today, right? And a lot of people had talked themselves into it. This time is different. We've never seen something like this before. This is extreme. This is going to be worse than the great financial crisis. And no, it just wasn't. It just wasn't, right? Look at this. This was February 5th, 2018, right? February 5th, 2018, Dow sold off almost 1,200 points that particular day, right? I'm sure there was a good reason to sell that day. This is February 8th, 2018. I'm sure there was a good reason to sell that day, right? 1,000 points down. It was a bad decision, but I'm sure there was a reason. And you look at all these other time periods, and you just got to understand every single one of these time periods. All it is, it's a buying opportunity. All it is people selling out of assets at poor prices that are going to regret it. They're going to regret it, man. And they do every single time. They don't in that moment. They think they made the right decision, right? But over the long term, even over a 3 or 5 or 7 year span, they always are making the wrong decision when they're panicking out, when everybody else is panicking out, right? You look at a stock like Tesla. This stock, since IPO, has appreciated 12,200% Tesla stock. But I can tell you, it's been a bumpy ride to get that 12,200% gain. The amount of times the stock sold off heavy, that there were concerns about Elon Musk, that there were concerns about demand, that there were concerns about profitability, about future margins, and this and that and this and that. And you got to keep in mind, now you look at the chart and it doesn't look like there was any volatility. I can tell you, it's just because the stock's gone up so much over time. There was this what you've seen over the past few years. This used to happen to Tesla all the time. So when you look back at this time frame, just understand this stock was even probably more volatile in these years than it was today, okay? And ultimately, I'm sure every single time people got shaken out of this stock, right? They got shaken out of this stock. And, as somebody that was, used to talk about Tesla an immense amount, I hardly talk about Tesla compared to how much I used to talk about Tesla. It was almost daily Tesla videos back in the day, right? When it was a much smaller community here on YouTube. But I can tell you, I definitely received messages from folks over time that they were done with Tesla stock, right? And they sold out and they owned a bunch of shares, but ultimately they got frustrated. The stock wasn't going anywhere. They were losing money on the stock. There was, everybody was writing negative articles, stuff like that. And they got shaken out of that stock, right? And ultimately, if they just held through, there was going to be the life-changing stock for those folks. People own like $100,000 that stock, and those shares would be worth about $1 million today, right? And it's like it happens every time. And people are going to make whatever decision they're going to make, but it's unfortunate because you go through these markets and people sell stocks at very, very poor prices, and it's always a different reason. They're going to steal your shares. They're going to steal your shares from under you, man. And you just got to understand the game that's being played here is a very high-level game, and it's not a new game. This has been going on for 150 years now. This is not a new game, man. 150 years they've been playing this game. And 150 years they've been using this reason or that reason to get your shares underneath you and sell out of stocks at poor prices that you actually love for the long term, but you get too caught up into whatever's going on. A balloon, boom, oh gosh, I got to sell. Oh, this happened, I got to sell. Oh, and people talk themselves into this. I got to sell. And it's like, dude, I understand. You got to be buying, you got to be taking advantage of dips in the market, especially significant dips, because, when great companies are down 50, 40, 50, 60, 70%, if you're not taking advantage of that, we've never seen it in human history where you haven't regretted that massively. Think about that. 150 years, we've never seen it where people haven't regretted not taking advantage of buying great companies when they're down 40, 50, 60, 70%. It's bottom line when it comes to that, man. No, the stock market's so different than, let's say, the real estate market, right? Because the real estate market isn't that volatile. It's not like shares are trading every day and you can see some insane sell-offs here and there, right? And so real estate's more practical. And so I just pull up this home here, okay, in Vegas, right? And it'd be like this home, they're trying to sell it right now for $24 million, right? Which, good luck getting that price. But then again, that's in the most exclusive community in Vegas, so maybe they'll get that 24 mil. But, imagine if all of a sudden, a few months later, this home's, trading for $10 million. And then, another 6, 12 months go by and it's trading at $50 million. And then it's trading at $20 million, then $15 million, then $45 million, then $70 million, right? That'd be completely absurd, right? And people would be panic selling real estate all the time, right? It is what would happen. The great thing for people when it comes to real estate is they can't freak out. They can't panic sell, right? It's not like the market's really open like that. It's not easy to just transact in real estate and just get rid of your property. But I can tell you, if it was as easy with real estate as it is with stocks to just transact and freak out and, oh my gosh, this happened, I got to sell my house now. People would do it, unfortunately. It sounds ridiculous, but they would. They would panic and they would sell home. Like if it was that easy of a process, they would do it. And, you might say, man, you kind of wish that could happen, right? Because you'd be able to pick up homes for very cheap because people panic all the time. But the best thing that happens for the masses is how hard the transaction is to complete for a home sale. It's a very complicated process. It's not like tomorrow you can sell your whole portfolio within the first 10 seconds of the market being open. Your entire portfolio, I don't care if you got $10 million in stocks. You can get it all sold in the first 10 seconds of the market tomorrow if you really wanted to, right? You could. You can't sell a $10 million house tomorrow. You can't, that's not the way this works. It's a complicated process that takes a significant amount of time, right? And so, but the stock market, people they don't think about it as real companies. They think about it as just these, tickers on their app, and they don't think about it more than that. When you got to understand, you're buying an actual company. When you're buying Apple, you're buying the actual company. When you buy Tesla, you're buying the actual company. When you buy Shopify stock, you're buying ownership in the actual company, okay? If you go buy Amazon stock tomorrow, you're buying a piece of ownership of actual Amazon. This is what you have to understand. This is what a lot of folks just don't understand, and this is why they panic, because they don't view it from that lens. They view it from the lens of, I own this little like ticker symbol on Robinhood or Fidelity or TD Ameritrade or whatever it is, and everybody's panicking, so I got to panic. And it's just like every single time, man. Every single time, it never fails. And, just understand, they're going to play this game. This isn't the end of this game. They'll be playing it next year. They'll play it the year after. They'll play it the year after. They'll play it the year after. And you just got to understand the game. And the only way you win this game is being the guy that's on the other side, taking more ownership and increasing your ownership position in 10, 15, 20 of the best companies in the world, right, that you love the most for the next 5, 10 years, and increasing your ownership bigger and bigger and bigger of those companies, while everybody gets to sell you those stocks for extremely cheap prices. And remember, it's not just like it's retail selling those stocks at bad prices. Many times it's Wall Street. Many times it's Wall Street dumping those shares at horrible prices. They're the biggest panic sellers out there because many times they're only looking at it for the next few hours or the next day. They're looking at it as a short-term perspective. They don't care if they sell you Tesla stock for $90 or $900. They just need to sell. They need to dump for whatever reason. Maybe they got a margin call. Maybe some options trades went bad. Maybe the uppers said, hey, dump. We don't want association with that stock right now. Who knows? You know what I mean? It could be a million different reasons. But you got to understand, the winners are the ones that are increasing the assets, not decreasing the assets. Continue to add your assets. Unless you're in some sort of market that's just like, let's call it like the beginning of 2021 market that was just like sky high and everybody and their grandma wanted to buy stocks, right? And it was like the most risk on we've seen since the tech bubble, or maybe you were in the tech bubble in 2000. Like those freak markets that you get every 10, 20, 30 years, I can understand maybe those are time periods where it's like, if anything, let's decrease our assets rather than increase our assets. But outside of those once in every 10 or 20 year spans, you got to be an adder of assets and picking up the shares for cheaper. And they're going to continue to say this time's different, this time's different. They've been saying that for 150 years. And the only suckers in the game were the ones who sold at poor prices time and time again to the folks that were on the other side buying those stocks, increasing their ownership. And then the other folks ended up becoming perma-bears and they were negative for the rest of their lives. So you definitely don't want to join that group, folks. No. Hope you guys enjoyed today's video. As always, we are less than 48 hours away from the biggest sale of the year on Become Master Stock Market and Dividend Investing Mastery. These are 2 must-have courses for everybody that's a stock market investor out there. They're my 2 most popular courses ever. They cover every important subject you would want covered in a course from my perspective as somebody that's been in this market for about 15 years now. Pinned comment will be if you want that deal sent over as soon as it drops on Valentine's Day. I appreciate everybody as always. Much love and have a great day.